So, hello again, friends, and welcome back to the channel, Giving It All Away. I'm Rick Gregson, and I'm giving it all away. So, this channel talks about life experience, life hacks, lifestyle design, as well as entrepreneurship and wealth building. These are topics near and dear to my heart, and I hope they're important to you as well. Today's topic is creating anchors for financial success. And I'm hoping this video sparks some interest and inspires some candid, open conversations. Please be sure to like and subscribe, and also hit notify if you'd like to be alerted as new videos are produced. All right, that said, let's get into the content. So, what does financial success mean to you? What does your dream look like? Is it freedom? How can you put the odds in your favor for achieving it? So we feel this subject is important because the world doesn't need more drones. It needs people who are secure and productive and secure in their beliefs, secure in their life, and secure in their finances. People who can make a difference and help to shape the world to come. So it seems many smart people don't always know where to begin. It's a complicated world, the world of finance. There's a lot of talking heads. Anything popularized on like a top 10 list from Motley Fool isn't really likely a true investing edge in my experience. I've just rarely seen those things blow up. Also, most things that have explosive growth tend to experience an eventual massive correction. So if it seems too good to be true, and if it's way too popularized, it probably is. So financial advisors are great if you can afford them. But in today's society, we tend to be DIY folks, right? We do it ourselves. So a lot of people taking the DIY approach to their own finances. Some people also these days are leveraging what's called a robo-advisor. That's generally less expensive than a traditional financial advisor, I should say than a human financial advisor. Robo-advisors follow an algorithm, which is basically a set of rules and calculations that are followed in order to produce a certain set of results, right? So another term for robo-trading or robo-advisor would be algorithmic trading or algo trading. So let's talk about why cash isn't king anymore. Unless, of course, you're talking about Johnny Cash because he is the man in black, and from an accounting sense, I am sure he is a man in the black, or was a man in the black. Holding cash as an asset doesn't weather well over time, especially in hard times. There's been a rise in prices due to economic conditions over the years, and I can just kind of go back to the 1970s with the oil crisis, the 1980s with the energy crisis, something called stagflation. We had the dot-com bubble, we had Enron, we had the 2008 economic bubble. Just since 2019, we've had the COVID-19 pandemic, the Ukrainian war. There's always something. From 2012 to 2021, the US housing market more than doubled in value. And that's kind of in tandem with the inflation rate. From 2012 to 2021, the inflation rate went from an average of 2.1% to an average of 4.7%. And at last reading, the inflation rate was at 7.9% for February of 2022. So what's an inflation rate? Well, it's an indicator of devaluation of currency, and it's usually reflected by rising prices. So, effectively it comes in at night and gobbles away the purchase power of your money. Late in the 1990s, there was a Russian diary where an author spoke of bread going from 2 rubles per loaf to 11 rubles per loaf. It wasn't that the bread changed, it was the value of the ruble, right? Much to here in the US, gasoline prices in 1986, when I was just a lad graduating high school, they were 91 cents a gallon. Today, 36 years later, they're around $4.19 on average per gallon. Many economists believe that a little inflation is good because it drives folks to invest. But of course, too much crushes the consumer buying power, and it makes hard times just more difficult for everyone. So hey guys, are you finding this video informative? Please be sure to comment below and let's start a conversation. So this video is really about the 4 anchors for success. At this point, I hope you see stashing your money into a mattress and even just a low interest savings account don't really do it justice, because you're not going to outpace inflation by those mechanisms. Now bear in mind, I am not a financial advisor, nor am I tied to any of the markets except by role of being an individual investor, and I've done it for a while. Made some mistakes, but I've had some decent outcomes too. So just also bear in mind, please, all monies are always at risk. So anchor number 1, having holdings in the stock market. That's where most people go when they want to invest. You can purchase stocks, bonds, exchange traded funds, or ETFs. You can also purchase index funds and mutual funds, and there's other vehicles out there, I'm sure. I'm just going to talk about those for the moment. So stocks give you fractional ownership in a company, and of course they may increase or lose value over time as the company or industry goes along. So you can make money, you can lose money. Bonds, however, are more like loans to an organization. The organization agrees to repay the loan with interest following either scheduled repayment dates or a single maturity date, depending on terms. Exchange traded funds, mutual funds, and index funds, I'm going to group them all together. They are different beasts. However, they're similar in the sense that they are a diversified group of holdings that's actually contained in a single share when you buy it. So a fund may own 100, 1,000 different companies or other investments. So it's a great way to get diversification without actually working to diversify your portfolio yourself. These are viewed as safer investments. So the last thing I'll talk about here is commodities. I didn't really have them up in the heading because I've not done anything with traditional commodities per se. But commodities are bought and sold using futures and options contracts. They're common for agricultural products like soybeans, corn, pork bellies. They're also common for energy products and metals, specifically like gold, silver, platinum. These are viewed as higher risk because they're speculative, or I should say more speculative. And again, it's an area I don't have any experience in, so I'm not going to go too deep with that. Common strategies in the stock market are buy and hold, short-term trading or day trading, or you can also chase dividends, which is actually what I try and do. Okay, the next we'll talk about is the second anchor, which is having holdings in cryptocurrency or other digital assets. I know cryptocurrency has been around for a bit, but let's go ahead and start at the basics here. What is cryptocurrency? Well, cryptocurrency is decentralized digital money that's generally based on blockchain technology. So what does decentralized mean? Well, Decentralized means there's no controlling bank or centralized ledger for the transactions. Not to say there's not a ledger, it's just not centralized. So how is blockchain used in finance? Glad you asked, because that's how the transactions get validated. They're validated by many peer computers working against a shared transaction record. And the process of validating a transaction is known as mining, cryptocurrency mining. So that's once a transaction is validated, it becomes part of the permanent blockchain, part of the transaction ledger, if you will. And the miners associated with validating that transaction are rewarded with bits of cryptocurrency. That's mining. Cryptocurrencies versus fiat currencies. You know, I've heard many times, I don't trust money I can't hold. Well, debunk. You know, we're all using money we don't hold. Consider debit cards and credit cards. So most world currencies today are fiat currencies. As a matter of fact, of those, 14 of the 192 countries, their currencies are pegged to the US dollar. So what's a fiat currency? Glad you asked that too. A fiat currency is a currency that's not backed up by a physical commodity like gold or silver, but rather it's backed more simply by the government that issued it. Its value is derived from supply and demand, and it's also somewhat fixed on the stability of the issuing government. In 1971, President Nixon took the US off of the gold standard. So what sold me on crypto? A few years ago, I was looking at buying some gold, scrap gold that a friend of mine had kind of suggested might be a good investment vehicle. And when I went to the exchange to look at buying it, they took US dollars or other types of currency, and they took Bitcoin. So if you can get a tangible commodity like gold with Bitcoin, that to me substantialized the proposition by Bitcoin, right? A gold trader wouldn't trade you a precious metal for something that didn't seem to have enough steam really underneath it. So it just made sense to go ahead and look at Bitcoin as an investment. So that's what kind of got me in on Bitcoin and cryptocurrency in general. And the way I look at it, I consider cryptocurrency and the other types of digital assets like NFTs, digital real estate. That's an interesting area, and like gaming fortifications, even weapons, armor, whatever. I'm not a gamer, but I'm intrigued by that. Anyway, I consider all of those as commodities. You know, the value of these assets will rise and fall, similar to any traditional asset. And digital assets may tend to be more impacted by market sentiment. For example, Elon Musk, right? Shortly after he made the announcement, or I should say Tesla made the announcement that they would be accepting Bitcoin as a form of payment for Teslas, then he tweeted out about the energy consumption of crypto mining, and that basically kneecapped the value of Bitcoin. So thank you, Elon, for doing that. And I can't say, I can't help but suspect that maybe there was an intention there, so Tesla could make some, or maybe he himself make some rather large additional purchases in Bitcoin while it's making that aggressive rise. So who knows? Speculation. Okay, so markets are, the cryptocurrency markets are always on. They're 24/7, 365. That's something I like about them, because I'm a big fan of putting your money and your assets to work for you. God knows we work hard enough to make our money. the money should be doing something while we're sleeping, right? So a market that's always on and always available, yeah, that's exciting to me. Um, Now I will say, in fair cautions, at the time of this writing, Warren Buffett is still not a fan. He's been saying he's not a fan for a long time now. And I checked some videos, checked some stuff recently, and he's still not a fan. So if you're a Warren Buffett, if you follow Warren Buffett's philosophies and methodologies, crypto may not be a thing. It may not be an anchor for you. But if you're open to it, I think it's exciting. So some of the common strategies here, and of course this is just common, not exhaustive. You can buy and hold. You can do short-term trading. The cool thing about cryptocurrency is it's fast processing, and it's, again, 24/7, 365. So you can do individual buy and sell, right? You can stake, which to me it's kind of like putting your cryptocurrency or having cryptocurrency of a certain type that earns interest. For example, there's a cryptocurrency out there called Tezos, and Tezos has earned staking rewards of 4.63% annually. So it's about like having it in a bank. It's not super exciting in terms of what it's doing for you, but it is kind of incentive to buy and hold that currency. And then of course you've got the currency moving, rising and falling, as all cryptos do. The other thing you can do is algorithmic trading. You know, there are robo brokerages for crypto, and they will pin crypto against crypto or crypto against US dollar token, and they will, work against the values there. So yeah, that different ways that you can actually leverage crypto to do something for you, right? Again, the whole idea is making money while you sleep. That's it. Okay, the third anchor I'll talk about is trading in the Forex market. Now, I don't know, I guess I consider everything trading when you get down to it. Yes, you want to hold positions, but truly everything is trading. It's all trading based. So let's talk about this for a minute. What is Forex trading? So Forex is a market where you essentially buy or sell one currency against another in lots, either taking a profit or suffering a loss, same as every other anchor we've talked about. Changes in the currencies, changes in the currency, they're teeny tiny, itty bitty, fractional, fractions of a cent, right? So you have to use lot sizes that are substantial enough to make these trades worthwhile, right? Lot sizes vary between micro lot sizes, which are 1,000 units of a currency, mini lot sizes, which are 10,000 units of a currency, and then standard lot sizes, which are 100,000 units of a currency. On the Forex market, trading begins at 5 p.m. on Sunday. It closes at 4 p.m. Eastern on Friday, and it runs 24 hours a day between those times. And it runs across 3 regions: Asia Pacific, Europe, and North America. Many brokerage firms offer Forex trading. You can also go online and look up Forex and find traders available to you. There's 7 commonly traded currency pairs. These are called the majors. It's basically euro against the US dollar, the US dollar against the Japanese yen, the British pound against the US dollar, the Australian dollar against the US dollar, the US dollar against the Canadian dollar, the US dollar against the Swiss franc, and the New Zealand dollar against the US dollar. So to afford trades, smaller investors will probably use something called leverage from the brokerage. And what's leverage? It's money borrowed from the brokerage to cover a purchase, right? Because again, you're dealing with at least 1,000 units of currency all the way up to potentially 100,000 units of currency. So using leverage still requires a margin, which is a portion put up by the investor. And by amplifying the volume of the trade, you can get larger profits, but you can also take steeper losses. So there's that concern. There's also a daily finance fee for using leverage. I've found it's not super expensive, or at least I don't feel like it is, against the amounts of leverage that you can gain. So a leverage position, if it drops too far, meaning that it starts to outpace what you've got in your investment account, it could result in a margin call, which could potentially wipe out your investment account. So, you can put safeguards in place, much like stop losses that you would use in standard stock market trading. So you can have mechanisms in place to act as safety, but like any other type of investing, your investment's at risk. So, and only you can choose the degree of risk that you're safe with. Okay, and let's talk about that last anchor. All right, here we are, the fourth anchor, which is having holdings in the real estate market. The easiest way to do this and the most common way to do this is owning your own home, right? That's the way a lot of people do this. It should appreciate in value over time. And little reference here, my parents, when they bought their house in the early 70s, if I remember right, their mortgage was in the low 30s. I want to say $33,000, and the home was pretty decent sized by today's standards on a standard city lot. Of course, it was rural Indiana, so go take with that. But yeah, $30-some thousand. When they sold it, I believe it was 150, 180, and it was sold in the 90s, right? So that's some awesome appreciation. So anyway, of course, appreciation depends on the local market. And when you sell the home, you cash out the equity. So boom, there you go, nice chunk. Rental properties, that's another good way to invest in the real estate market. These should provide cash flow as either short-term or long-term rentals. These also should appreciate in time, just depending on your local market. There is a requirement for overhead, for maintenance and or management fees. So that may be a little more of a burden. But should you choose to liquidate a rental property, of course, you cash out the equity. And since it's a business, you can also take a look at a larger portion of income, because there's potential revenue out there for whoever purchases the property, depending on their intended use. So that may even factor into it. So rather than just getting the market value for the home, there may be other factors enhancing that number when you go to sell the property. The next thing in real estate would be flipping properties. That sounds exhausting to me, but people do it. It seems like a good number of people do it. And I'm a DIY kind of guy, but I don't do everything. So I don't do windows, and I hate to paint. Anyway, so those may take a lot of work, right? There's a cycle to it. You've got to purchase, you've got to renovate, you've got to show, you've got to sell, you've got to close. Unless you're working with different partner relationships and discounted prices, that can be a lot. The property, though, should appreciate in value over time, again, depending on your local market. And you will, when you sell the property, you'll cash out on equity. So there is that. The other thing you could look at would be owning land. That's an interesting it's an interesting direction, because land is a limited resource. At least until we begin colonizing Mars. Thank you, Elon Musk. That should be a good investment. It should appreciate over time, depending on the local market. I'm not going to stop saying that. Sorry, it's in my notes. Also, you're going to cash out on the equity when you sell the property. Another way to invest in real estate. You could invest in real estate investment trusts. They're called REITs, REITs. And they've got different sectors that they're for. There's REITs for data centers, there's REITs for healthcare, there's REITs for office spaces, there's REITs for residential spaces, there's REITs for retail spaces, and that's just to name a few. There's actually a long list. Many are available for purchase through the traditional stock market as either stocks or bonds. The nice thing about using REITs is there's a low cost for entry, and it's relatively quick to acquire. It's just the time it takes to make the purchase through the platform, rather than actually purchasing real estate, right? So that's an interesting direction to take. Also, REITs are required to pay out nearly all after-tax profits to the investors as dividends. So that's the direction to take with that, right? If it's paying you dividends, it's a beautiful thing. I love dividends. I'm a dividend chaser. So, okay, the last thing I've got for real estate, and I didn't know this was out there. I found this interesting. Crowdfunding platforms. So these allow you to invest in a specific development project. And these are generally more for long-haul investors, like a 5 to 10 year maturity. They may require minimum investments, and they may have associated fees. So, but that's an interesting vehicle, and crowdfunding, seems to be picking up some steam. So, interesting. All right, in summary for all of this, so what does financial success mean to you? Well, for me, it's buying back a year of my life and taking some time off from my traditional work role, and making this foray into podcasting and YouTubing, and trying to get some information out there and help to enlighten people on what they can be looking at and what might help them moving forward. So in terms of investing overall, I kind of feel like I started late, even though I have been investing since the 90s, just not super heavy. The 401k idea and the SIP IRA haven't really been my things. And in some sense, I still feel like I'm making up for lost time. So my portfolio tends to take on a little higher risk. But with that, I'm hoping for the higher rewards. We'll see. Time will tell. So for my personal portfolio, in terms of diversification, I'm choosing to diversify across different markets, or in this case, anchors, rather than diversifying within a single market. And I'll explain that here in just a moment. My financial security today, presently, rests on 3 of the 4 anchors that I have previously went through. The traditional stock market, using dividend stocks. I currently only own one stock. It's Oxford Lane Capital, ticker symbol OXLC. It's a fund that pays monthly dividends. That's what I found attractive about it. And it got kneecapped during the pandemic. So, it seemed like a good time to buy. And so far it's working out. And going back to the diversification within a single market, I'm going to paraphrase Charlie Munger, who's Warren Buffett's right-hand man. If you hold a diverse portfolio, you can't expect to do better than average. Now, of course, don't get me wrong, the stock market average is usually 10% year over year. But to his point, you know, I am trying to do better than average. So, you know, I don't worry too much about diversification in any single market space. I would rather diversify by having holdings across the various anchors. I have cryptocurrency holdings. I do Forex trading. It's kind of give or take on that right now. I just started that in December, so it's kind of a newer area for me. I have not made a foray into real estate yet. I've been researching and looking at some ideas, but I'm not in a rush right now. That's one thing with any of these. Don't be in a rush. I mean, don't let the grass grow either, but don't rush into something before you have some idea why you're there and what you're looking to do with it and how it works, right? So that's probably some of the best advice I can give. All right, so lastly, we'd like to know which of the anchors do you currently have in place? Have you considered any of the others? We'd like to hear from you in the comments below. Also, please be sure to connect with us here on Medium, on LinkedIn, and on Twitter. We'd like to grow this tribe. So thank you so much for joining us tonight, and we'll talk again soon.